Confused clients risk losing health care coverage. Affluent investors' appetite for financial advice continues to grow. Lifestyle choices that will cost clients. That and so much more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome in. It's Elevate Your Wealth, hosted by Mark Stimpson, Casey Elkins, and Steve O'Flynn. Elevated Financial Management, where you can find these three right here in Seattle. They've got 75 plus years combined experience helping their clients get ready for retirement, certified financial fiduciaries. I'm Morgan Patrick. Pleasure to jump on. Want to remind you there's a website to check out. We've got a lot of tools at this website, efmnw.com. Go there. Again, all letters, efmnw.com. Links to the TV show, our radio show, and podcast forum. But again, retirement planning information, contact information. It's a great resource for you, so check it out, efmnw.com. Before we dive in, I always ask, Case, we'll start with you. How was the week?
Oh, it's been a great week. Yeah, really good. We're excited, as I think most of you probably know at this stage. We've just added some new additional office space, I should say, at our location here in Renton. And so we just did the punch walk for that last week, Mark and I. And we're really excited. It looks great. We're looking to hire the right folks and always looking to expand and add the right people to the team, which is really exciting. And it's really cool to see where things are at right now with the business and what the future looks like. It's very positive, and a lot of it is due to the folks that listen to this show, that watch us on TV, that have come to the retirement classes. We thank each of you really for the putting your trust in us and the small part that we get to play in everybody's retirement. So we're really excited about where we're at. We're really excited for what comes next, and we'll just keep hustling our way through.
I just want to echo what Casey said. Simply put, the listeners are what makes this happen. And we just want to thank everybody that takes the time, or you're driving and you're listening. And we thank you, because we count it very much a privilege. Mariners are back. They're playing some ball right now too. So that's always good. So yeah, we're looking forward to helping more and more of our local native Washingtonians and helping them get retired. And we've got some clients actually doing some really cool stuff right now when it comes to retirement planning. So we're excited to be just to play a small part in their goals and dreams of a retirement that they worked and thought about for decades and decades.
I'll just say right now, and I want to go on record right now, because we're gonna have a record of this show, right? The Mariners are going all the way this year.
Okay.
I'm putting it out there right now. They're going all the way this year. I don't care. It's been a rough start. We'll say whatever we want. They're going all the way right now. They're doing it. I believe in them 100%.
Well, I was going to ask Mark. I mean, you're kind of the Papa Bear of this operation. How cool is it? How cool is it to look around and see where it was, how it's grown, where it is?
Yeah, that is, and I appreciate you bringing this up, Morgan, because what I've gone through over the last 4 decades, had an office in Bellevue for a long, long time, over 20 years. Then the drive got really bad for me. The commute was horrible. Set up a little office that we remodeled in Federal Way, but that was a problem for our East Side clients. So to see what Casey and I have built out here really has been a joy to be a part of. And we've got some wonderful guys helping us now, and Steve and Craig. And so it really has been a real metamorphosis. We went from a caterpillar to a butterfly in the last 4 or 5 years. So it's been a big change, and it's been a wonderful change though. So that's been pretty cool.
Well, you're helping Seattle retire, which I think is, I mean, when you start thinking about it, we all are working for what is going to be our retirement one day, and we're putting these monies away. And so many of you, native Washingtonians, as well as those have moved to Washington in the last whatever, you guys have the portfolios, but you don't have the plan. Now, the opportunity, no cost, no obligation, no pressure, to get into the office at Elevated Financial Management and meet with the team and talk about kind of where you are, where you want to be, and then create that plan to get you there. That's coming up. Now, on this show, cutting edge, whatever's hot topic when it comes to planning, we're talking about it. Guys, Rethinking 65 gave us this article I believe it's, I'll try to say this, Terry Freikenberg. Confused clients risk losing healthcare coverage. Why did it jump out at you? Obviously, healthcare is a big deal.
Yeah, this is something that, you know, the listeners know. I've been on Medicare now for 4 years, and so this is something you want to be paying attention to. And what was striking about this article was the simple fact that she only owed 1 nickel, 5 cents on her premium, and they turned around and canceled her. Now, that to me is almost, well, in my book, it's criminal in that way because, you know, she went to the marketplace, some changes were made, and that's what I just want to point out. All of us need to be looking at this and paying attention because there are deductibles, there are co-pays. Have you gone a Med Advantage plan versus a Med Supplement plan? And if that's the case, if you've gone Med Advantage, you know, the thing that's cool when we turn 65, whether we do either one, they have to take us in all our problems. But if you decide maybe a year down the road or 2 years down the road, hey, I went with Med Advantage to begin with, but now I want to switch to a Med Supplement, well, now you're going to be at the mercy of the insurance carriers. You're going to have to go through underwriting, and they can say no. Now, this could be a real problem. That's why the decision you make originally matters tremendously. So you really want to be talking and working with someone that understands the rules and the intricacies of medical insurance planning, because that is a world unto itself. And that doesn't even, we haven't even touched about the long-term care piece of this. So this is something all of us that are listening need to be aware of and make sure that you're making decisions based on good knowledge.
You know, the article makes the point that it was legal for them to drop her, right? So, and she had gotten letters indicating that she might lose her coverage because premiums hadn't been met, but the premium was dropped down to 1 cent per month, right? So that's the issue, right? Is she was confused. She goes, well, it's a penny. There must be a rounding error or something. Who's going to send me a bill for a penny? It costs more than that to actually send me this bill, right? And the time and effort that goes into all of this, right? So she, and rightfully so. I mean, I would probably make the same assumption, but that being said, she did receive the letters, right? She did receive the letters. Now, bad on the insurance company for not having picked up the phone and tried to get in touch with her and say, hey, do you understand what's happening here? But that all being said, this is why it's so important to have somebody who specializes in Medicare that can answer a question for you, that when you get a letter like that, you have a resource, you have a source of truth that can say, well, no, you do need to pay this penny. As ridiculous as it may seem, you do need to take care of this. And so all of this could have been avoided. Now, her insurance has been reinstated, all those things, but it's still headache, right? It's still bills that came through while she wasn't covered. And so there's a lot of pieces to this. And I think just kind of in a nutshell, again, what it really comes back to is, are you trying to go it alone and figure this all out, or are you using somebody that can help you avoid these types of pitfalls? And actually, the next segment, we're going to talk about something more along those lines, specifically about financial advice and people seeking out financial advice. But, you know, I mean, I think about my own personal life. When it comes down to it, I'm not an expert in everything. I'm an expert in finance, but there's a lot of things in my life that I'm not. And in those circumstances, I find somebody who is, right? Because I don't want to make that mistake. Sure, you could learn from the school of hard knocks. And unfortunately, that's what happened to this person in this article, but it didn't have to happen that way, right? And I've used this analogy before. You can do it yourself, just like I can wire up things in my own home. Legally, I'm allowed to be an electrician in my own home. Does that make it a good idea? Well, I guess it depends on the person, but probably for most people, no, because that's a life and safety. That's a health issue, right? And I'm not interested in putting my family at risk because I can do it, but that doesn't mean that I should do it. And that's the big difference, right? Are you using the right resource at the right time to make sure that you don't miss the boat and have this type of circumstance?
There's a quick point here. It says open the mail. Okay. The insurance companies are sending us stuff, right?
Pay attention.
Want to round file everything, right? This is a mistake because and I love how they put on they put important insurance information on the outside of the envelope, hoping they're going to get you to be willing to open it, because that's on us, right? If we just throw it away or we don't open it, well, there can be important explanation of benefits in there that can help you not make mistakes like Casey was talking about because you took the time to understand and read it. The problem is a lot of people, they just don't want to read it. Then are you in network or out of network, depending on the type of plan you have. So there is a lot to this, and you really want to be working with someone that understands what they're doing.
Yeah, I mean, it's important to, obviously, I think we all get pounded with junk mail, but could be some important stuff in front of you. So make sure you're opening it, make sure you're checking it, and if it's junk, rip through it. But if it's not, obviously put that aside and spend some time on it. But also, become very familiar with your portals online, with your insurance companies, making sure you're just aware of where your coverage is. But having professionals help you in this area, you won't have too many misses, so to speak. Now, opportunity to come in and talk about your overall plan, getting that done, or maybe getting that second opinion. Case, what's going to happen if they call?
Well, this is for folks that want a written financial plan, that in reality want somebody in their corner fighting for them, somebody that can look at where you're at financially, what investments you have currently, the path you're on for Social Security, for Medicare, all those cares and concerns that keep folks up at night. This is your opportunity to solve those problems. So we will sit down with you, have a one-on-one conversation, build a custom tailored retirement plan that's specifically about what you would like to see and what you would like to do in your retirement. It's all complimentary. That's no obligation. You leave your checkbook at home. We'll be happy to meet with you. Please don't hesitate. Pick up the phone. Give us a call.
All right, here's the phone number, 866-668-3625. That's 866-668-3625. As Case said, no cost, no obligation. There's no pressure here. This is an opportunity to see if you're on track for your retirement. 866-668-3625. We've got more Elevate Your Wealth coming up. We are back on Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle. That's exactly where you can find Mark Stimpson, Casey Elkins, and Steve O'Flynn. They've got 75 combined years of experience helping their clients get ready for retirement, certified financial fiduciaries. I'm Morgan Patrick. Pleasure to jump on. Got a lot of things to tell you about when it comes to planning and being prepared. There's going to be an opportunity to get on their calendar at Elevated Financial Management. The appointments we open up through the show are no cost, no obligation. There's no pressure. See if you're on track for your retirement. We also have a book, and it's a resource, Break the Glass. Go to breaktheglassbook.com. Casey and Mark decided to put this out, and you can grab one, no cost, no obligation. Just enter your information at breaktheglassbook.com, and they'll send it out to you. Again, treat that as a resource. We hit the latest. So we've got another article, this one also from Rethinking 65. Affluent investors, guys, appetite for financial advice continues to grow.
Yeah, as people accumulate more and more wealth, in reality, their situation starts to become more complicated. And
Sure.
so that's really what's at the crux of this. And I just want to preface the point that the article says affluent investors, right? So what really is that? We don't have to get into specifics, but our point being really that we work with folks that have multiple millions, tens of millions, but we also work with folks that have less than $1 million. We work with folks that have 250,000, 300,000, 800,000. So our point here is not to try to alienate certain folks or anything like that. But what really is important, or what sticks out to us about this, Morgan, is the folks that do have those higher asset values. I think that in reality, we all recognize that they might know something that others don't know, right? They might have more experience that others haven't yet to have. And so that being the case, if they're seeking out financial advice more and more, there's a reason behind it. And there's a solid chance that that's a good part of why they have become affluent investors, why they have the nest egg that they have, because they have somebody in their corner fighting for them. And we think there's a lot of value to that, just kind of like we were talking about in the last segment. And so, as things do become more complicated, and
Sure.
You know what, even folks that maybe don't have large asset values, but as you're approaching retirement, things get more and more complicated, regardless of the assets that you have. It really does. It's something that you need to be paying attention to. because there's a lot of decisions that have to be made as you're getting closer to retirement, and it can feel like a whirlwind. And so it's important to pay attention to what's going on.
And many people have the same common themes. Do I have enough to live in retirement? Taxes. Are we paying too much in taxes? Beneficiaries, inheritance, regardless of the size of account, everyone has the same kind of concerns, I feel.
Yeah.
And one of the things the article talks about is there's still going to be a fairly significant sector of the population that are do-it-yourselfers, right?
Yep.
Or they're just flat, adverse to paying any fees. Well, it's interesting if you look at some of the studies, that Schwab, Fidelity have put out over the years, BlackRock, that on average, those that are working with a financial advisor are doing better in overall returns because we can help, especially if they're doing strategic active management of these portfolios. They don't just ride the train all the way down to the bottom when it's maybe going the wrong way, and they get some help and they reduce the losses. It's always about reducing losses, right? Growth is great, but if we can eliminate a lot of the downside, the negative, it's amazing how much better a portfolio can perform over time if we can eliminate some of those big dips, right? I think that's something we all need to be concerned about and should really one of the main reasons and driving factors as to why those people that use an advisor are a little more successful in that regard.
Yeah.
Well, I just want to jump in. It's professional guidance when you start thinking about it. And, to dial it in for Mark, it's like, we play golf. And I was self-taught until I was probably mid to late 20s. And I was shooting in the low 80s. And I wanted to be better. And I had gotten to a point where I could not go any lower. And I said, you know what? I need guidance. I need a coach. I need somebody to take a look at what I'm doing and figure out maybe I could do it a little bit better. Maybe I'm doing something wrong. And through that experience, I was able to recognize some of the errors. I corrected those errors and my handicap got a lot lower. And that's just a golf analogy.
Yeah.
From a financial advising, arena, this is not what you do. And you don't know what you don't know. Working with a retirement coach, a planning coach, someone that does this on a daily basis is just like my golf coach. They're going to see things that you probably can't see. You're too close to it. But having these types of conversations, with a professional, Mark pointed it out, Casey said it, Steve said it, the people that are seeking out this advice are people that are doing well.
Morgan, let me ask you something. So the golf thing. Usually you ask us questions, right? But I get to ask.
Yeah,
you.
go ahead.
So you're a good golfer, right? I mean, that's the reality of it. Do you wish that you had gotten a coach sooner in the golf world?
The minute I saw what I was doing, the minute I realized that I had been spending, a decade making certain mistakes, and I could have switched it really quickly. Yeah, that was frustrating, but at the same time, I was so relieved because I had found guidance.
Yeah, I think that's it, right? So, I really appreciate you bringing that up, Morgan, because that's sometimes we get asked, is it too early for me to have a financial advisor? The answer is no, right? It's not. Even if you're just starting out, if you want somebody to help you guide and make decisions, how much should I save? What can I save? Those kinds of things. And yeah, that's not the most advanced level of planning out there, but it definitely puts you down a better path, or at least shortcuts the path for you a little bit. I mentioned on the show previously, Morgan, I'm taking golf lessons right now. I didn't realize that you weren't supposed to use golf clubs to dig holes on the course, but apparently that's not what they're for. So I'm just doing the best that I can. But my point being the same, right? The sooner that you get that advice, the sooner that you can start making the better decisions. And that is how you can shortcut the path. And, Mark, you mentioned do-it-yourselfers. In reality, a lot of people are do-it-yourselfers and they don't know it, right? Because you have a 401k and you might think, well, I don't go in there and pick Apple stock and Microsoft stock and these different things. So I'm not a do-it-yourselfer. But somebody picked the investment allocation inside your 401k. And chances are it was not a financial advisor. Very few people have financial advisors helping them make the selections inside of their 401k. And so by default, that makes you a do-it-yourselfer, whether you're actively involved in it or not. You made those decisions, and nobody else influenced them or helped you make those or looked at your individual situation. And so, we see a lot of folks that in reality, they come in, Steve, Mark, we see this a lot, right? They come in, they've been great savers, right? Because we've got a lot of good companies in the area, people that have nice retirements, that have worked really, really hard, scrimped and saved and busted their butt to save the money that they have. And they've done a good job saving, and sometimes they've done a good job investing. But more often than not, when we see somebody who's done a good job investing and we tell them that, man, this has done really well, they go, thanks. I just kind of picked it like 20 years ago and I haven't looked at it since, right? Yeah. So it really was not, they kind of got lucky in some way, right? And I'm glad that they did. I'm glad it worked out for them. But the point being, had they had an advisor, maybe they'd be a little further down the path, right? Or maybe they'd at least have more confidence about the path that they're on. And that's really the point and why this sticks out to us, this article and the thought. And I just want to say, there's got to be somebody out there thinking it. Well, here's a financial advisor telling me that I should get a financial advisor, right? Let's address that real quick. That is true. That if you're thinking that is absolutely true. But here's the case: whether it's us or anybody else, we think you need to have a financial advisor. Yeah. This is not us saying pick up the phone and call us right now. Of course, we'd love to help everybody that we can. But the point still being, if you already have an advisor, lean into it and get their help. And if you don't have one, find who the right one is for you. That might be us. It might not be. I don't know. That's up to you to decide. But still, take advantage and figure out how to get the best help that you can.
Yeah, Steve just had a wonderful thing happen and a compliment from a client that came in. And she basically said at the end, she made the simple statement, I didn't realize what I was missing working with the big box store that she was until she talked with somebody else. And now she regretted how long it took her to find somebody else to talk to, and she's so thankful now that in getting advice that the big box store wasn't even giving it to her.
And it's funny, she mentioned something so simple. We talk about the buckets in the office, just a different way of thinking about how you're invested. Yep. You've got the yellow bucket, which is cash, the green bucket, which is income, and the red bucket, which is high-risk investments. Yeah. So that was really nice feedback from her.
Yeah. So if you're listening and maybe you're concerned about where your income's going to come from, or as we've been talking about, you're just maybe thinking, should I talk to an advisor? If you've worked at Boeing, we want to have a conversation. You're going to leave your checkbook at home, and all we're going to do is talk. That's it. There'll be no pressure. And so please, you got questions about taxes, Medicare, long-term care, life insurance, please pick up the phone, give us a call. We're here to help.
Yeah, they can be your caddy in retirement, right? From a golf analogy. Yeah, they can tell you which clubs to hit. They can tell you, again, it's about strategy. Call and grab one of these appointments, 866-668-3625. That's 866-668-3625. No cost, no obligation. There is no pressure. This is about planning for your future. 866-668-3625. We've got more Elevate Your Wealth coming up. Welcome back in. It's Elevate Your Wealth Seattle, and it's powered by Elevated Financial Management, hosted by Mark Stimpson, Casey Elkins, and Steve O'Flynn. 75 combined years of experience on this show today. Certified financial fiduciaries. I'm Morgan Patrick. Pleasure to jump on. We're going to get to lifestyle choices that will cost clients. That's our latest article from Dave Buck and Rethinking 65. That's coming up next. I do want to talk about Break the Glass. So Case and Mark, the reason you wanted to put this book out there, and we've got a way for our listeners to grab a copy at breaktheglassbook.com. But tell us about the book.
It's something that we're really excited to share. We keep talking about it because we get a lot of nice compliments. We know a lot of people read the book, and they've come into us after reading the book, and they said, you know what, I was concerned. I wasn't sure what to do. I was concerned that I wasn't even sure what I should be concerned about as I move into retirement. And so, the book really does highlight those problem areas, things that need attention. And we'd like to think it does it in a way that is easy to understand. And is a way that like I said before, it's written in such a way that it's for the consumer. It's for the retiree. It's not written for financial planners. So we don't use a lot of industry lingo or jargon, things like that. It's specifically meant for folks that want to be educated about their retirement. We're really excited to provide it for the audience. Please go to breaktheglassbook.com. Enter a little bit of information. We'll send it out to you. We take care of all the shipping and everything. It comes in a golden envelope, so it'll be your golden ticket to retirement, just like Willy Wonka, and something that we're really excited to bring to the audience. So please take advantage of it.
Yeah, in fact, what we're doing right now is we're on version 2. We're updating the numbers to get them current through 2026, which will be good. Our last one was done in 23. So we're updating everything right now. So that's going to be done and getting printed here very, very shortly. So we're excited about that. So that new book will be coming out here in just a little while. All
right. So it's breaktheglassbook.com. Go there, get signed up. They'll ship that out to you. No cost, no obligation. breaktheglassbook.com. All right, guys. Another article in front of us, lifestyle choices that will cost clients, from Dave Buck, Rethinking 65. Lifestyle choices in retirement. Some can be expensive.
Yep. And this was a really great article for us because, we focus a lot of times on what the market is doing, how the client, especially if the market is down. But this really is something I want our listeners to really think about, because lifestyle choices can affect your plan sometimes even more than a bad market cycle, right? And it gives the example of a person that he drove a nice Dodge truck, but he wanted a new one. And he went out and he purchased that, and good for him. But you need to kind of have that kind of built in to the plan, because if your cash flow analysis doesn't really have these type of expenditures going out, it can put a dent in that money down the road. And we need to be thinking about that, because it could backfire if we're not careful, especially at the beginning years. So let's say you go buy a new truck, or you take a $50,000 vacation, and then the market doesn't perform well. This can be like what we talk about all the time. Sequence of return risk can rear its ugly head, but a lot of times it's the lifestyle choices that can add some concern and some volatility to that portfolio that really doesn't get talked about or dealt with enough like it needs to be. I think we've been seeing that with some of our clients right now, actually.
Yeah, and the article actually brings out that this individual, Ron, it says Ron loves pickup trucks, right? And then it says that the neighbor, the person writing the article, was accustomed to seeing him drive his silver Dodge Ram, seeing it in the driveway. But they proudly drove it everywhere, Ron and his wife. But then one day the writer was surprised to see a Lexus SUV. So he had a pickup truck, sold it, got a Lexus SUV, surprised everybody, right? Because he's a pickup truck guy. I can relate to that. He's a pickup truck guy. And then a week later, there's a pickup truck back in the driveway, right? So he made a decision that he pretty quickly regretted and kind of had to unwind it. And so the person that wrote the article interviewed the neighbor and stuff, and he said, look, I just needed to get back to my pickup truck. And so the point being here is that those lifestyle choices should be thought out, right? Certain things can sound good, and when you think about retirement and the golden years, kicking back, this and that, but what we find is that people that don't have structure in their day in retirement do this little thing called retail therapy. And they do a lot of shopping, and they spend a lot of money that maybe they didn't need to spend. Actually, a story comes to mind. A gentleman, he's a client of another firm. A friend of ours owns another firm, and he moved into retirement, had done well saving, really had done a nice job saving. Moved into retirement and went crazy and bought 20, 30 pairs of Louis Vuitton shoes and Omega watches, and he's got Gucci bags, and just went wild when he got into retirement. And hey, you want to treat yourself a little bit or something. There's nothing wrong with that, but he went a little overboard, right? Yeah. And that really had an impact on what the rest of his retirement looked like. Even though the retirement plan had accounted for some level of higher spending, it did not account for that level of higher spending. And it's like a whip, right? If you think about a whip, a small movement on the part that's in your hand creates a big snap at the other end. And sometimes you don't feel the effect of that snap for a second. There's a delay there. Retirement's the same way. If we're looking at a 25 or 30-year retirement, even a small change up front, a flick of that wrist, can create a big snap for us later in retirement that we weren't expecting, and it can really start to impact the day-to-day.
Yeah, in fact, it makes this statement. It says, many retirees enter retirement prepared financially, yet unprepared behaviorally, right? So they transition from that structure like you mentioned. I can't even say behavior. Everybody's laughing right now. Here, I can't say that right. But it makes this point. It says, now you have an open calendar of unstructured time that can introduce choices that affect spending patterns, not for weeks or months, but for decades. So again, this is something we want to think about.
Well, and it comes back to what we've been talking about the entire show, and that's structure. And if you have a plan, and when you're working with professionals, these questions are going to come up. A lot of do-it-yourselfers, or maybe people that are sitting on portfolios, and they get to retirement, and man, there's the money, right? And they can go a little crazy. If you have structure, you're being held accountable, but you're also given permission to spend your money because you have a plan. Yeah,
it is the plan that gives you the permission and gives you the confidence to do it, right? That's the other side. It's so interesting, the psychology behind all of this, and there are books written about behavioral finance and those kinds of things. And we won't get too deep into the weeds there, but we see one of two things. We see folks that don't have a plan, that go and spend too much. And really what they don't have there is they don't have a plan for their time, right? They have a plan of what they want to buy, but they don't have a plan of what they want to do. They didn't retire to something in retirement. They haven't found something that gives them joy or purpose in retirement. And so now they don't have to punch a clock. They don't have to report to the boss or have reports turned in or anything like that. And so they fill their time with these fun things that end up costing a lot of money. And that's okay if that's part of the overall plan, right? But if it's not, that's where it starts to become an issue. Then the other side of it is folks that have saved well, and they also don't have a plan, and so they don't feel comfortable. So they don't go spend, right? So they don't spend anything. They get their Social Security.
They're gripping.
Exactly. They're holding on tight, white knuckling it through retirement, and just concerned about every dollar in their life, and they don't enjoy their time. And so, it's kind of like this big teeter-totter, right? We have folks kind of enjoying their time maybe a little too much, and then we have folks not enjoying it at all. And the plan is what helps to bring everything back to reality and to give you confidence that, yes, I can go spend, but also to know what that buffer is, right? What is the limit to make sure that I'm spending responsibly so that, 5 years from now, 10 years from now, I'm still okay and I'm still confident in my spending.
Yeah, I love this point. It says, and we've been talking about lifestyle changes, right? They do not mean when we have one of those that the retirement plan has failed. They simply reveal the reality that retirement is not static. Things are going to change, right? It's an evolving phase of life where priorities shift. I love this thought. It says the goal is not to prevent clients from enjoying their retirement. The goal is to anticipate these changes, behavioral changes, right? And that can influence the way we spend our money. So again, this is something we all want to be thinking about, right? Because these changes, they need to be talked about. We need to have conversations with our clients about it. And if we do that, they can end up being very successful, even though they're having all these changes that can be really cool in a retirement phase.
So it's always interesting to me too. The article makes the point, moving into retirement, people have a heightened sense of living within our means, or like a fixed income. And sometimes people will say that, right? Well, I'm going to be on a fixed income. Yeah. Just like quick reality check. Most people are already on a fixed income, right? I don't know about you, but in every job I've ever had, I could never go to the boss and say, hey, I need an extra 30 grand this month. I got some big expenditures. So if you could help me out, that'd be great. That's not how it works. You have the income that you have. And maybe if you're in a sales job or something like that, you get bonuses or things. But in reality, most people live their lives on a fixed income. Retirement is not any different than that. So the key is when you're doing the retirement plan, make sure that fixed amount is enough that you get to go have your fun and do what you want to do. Yeah. That's what this all comes back to. It comes back to the income to give you the confidence to let you go do what you'd like.
I mean, it's exciting, right? This is what you plan for. I mean, you can plan your lifestyle, but understand there are parameters, but have fun with it. Opportunity right now to have this kind of fun. Meet with the team at Elevated Financial Management. No cost, no obligation, no pressure. Case, what's going to happen?
Well, it's all, again, it comes back to creating that income. So the first thing that we're going to talk to you about is what you'd like to do in your retirement. And it isn't just about the finances of it. It's about the time. What do you want to do with your time? That's your most valuable resource. And then we're going to figure out how to take those finances and make them fit those goals. How do we take the assets that you have and deploy them appropriately so that you can go and enjoy the time and do what it is that you'd like to do? Spend the time with the family, the grandkids. So with that, we'll take a look at the risk in your portfolio. We'll take a look at the income that it currently creates and what we need it to create in the future. We'll talk with you about long-term care. Very, very important. We'll talk about taxes and the impact that's going to have on your retirement. So don't hesitate. Pick up the phone. Give us a shout.
Here's the phone number, 866-668-3625. That number again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number, no cost, no obligation, no pressure, 866-668-3625. When we return, questions from around the world of retirement planning. Back. Elevate your wealth. Mark Stimpson, Casey Elkins, Steve O'Flynn, 75 plus years combined experience between these three certified financial fiduciaries. I'm Morgan Patrick. A pleasure to jump on and help Seattle and the surrounding area retire. You can find us at Elevated Financial Management. The website, efmnw.com. All letters, efmnw.com. Again, a resource. Links to the TV show, radio show, and podcast form. Good information on planning, background information on the team, and contact information if you've got questions about where you sit with your retirement. And if you're sitting on a portfolio, you haven't started planning, if you're in the middle of something, need that second opinion, guess what? We've got complimentary, no obligation appointments. We'll tell you how to get those as we move through. Now, these are questions from around the country. And Mark, you're going to get the first one out of the box. These come in, again, from the United States. It's about retirement. How would you handle this? They've been retired for about a year. Financially, things are pretty good. We'll put it in the fine category. But they're feeling a lack of structure, there's that word, and also purpose. So how do you help someone that may come in to Elevated, help them design a retirement lifestyle that actually feels fulfilling?
Yeah, see, we kind of been talking about this even the last segment, right? This is really boiling down a lot to, lifestyle changes, lifestyle, the purpose you might have, what you want to do. But, you could have the greatest, be prepared financially, right, by saving a bunch of money. But that doesn't mean that you've been a good saver. Now you have to become a good spender. And that is really hard for a lot of our clients. In fact, that's probably the biggest challenge that we end up having. So, again, when we build them a plan and then we show them, we usually will up their income quite a bit above even what they're asking for. And in the end, they are so thankful that they have done that because we tend to pare our life down to what our income is, right? And we've had clients where she had several $1 million in stock, but she was living on Social Security only. And we upped her income went up almost $20,000 a month, not a year, but a month. And she's living completely different, but she would have never have done that if she would have never have come in here, right? She was scared to start spending what we call the red bucket, right? And I think this is something we all need to think about because why did we save the money in the first place? Now, you might be saving it to give it to your children, right? That's a different discussion. But for most of us, we're saving it for our retirement so that we can live and do the things that we dreamed and hoped we would do. That's why we did it, right? So again, we want to create a plan where they have confidence to go spend it. They got clarity on how they're going to do it, and they're going to be able to be independent because they've done it. So again, that's really what our goal is here.
Yeah, it is. And you know what? In the question that you asked, Morgan, you used a specific word. You said fulfilling or fulfilled, right? I like cars, right? I like cars. They're not inexpensive purchases, but I like cars. I like motorcycles, that kind of thing. At the end of the day, never once have I bought a car and come home and told my wife, I feel really fulfilled, right? So our job as retirement planners is not specifically to help you meet financial goals. If we're trying to help you feel fulfilled in retirement, it's about using the money to do things that make you feel fulfilled, right?
Yes.
So is that taking a trip with the grandkids? Is that taking your children and their children on a cruise together? Is it a hobby that you've been waiting for years to finally tackle and feel like you've mastered? Is it a garden, right? Whatever it is, that fulfillment piece is not specifically financially related. It's really more of an emotional thing, right? Mm-hmm. So what is it that you want to do? And I promise you right now, if you come into our office and talk with us, one of the first things that we're going to ask you is, what do you want to do in your retirement? Yeah. And you'll notice it will not be, let me tell you about this great fund that we have that did 18% last year. It won't be, let me tell you why Apple stock is the thing that you should be pouring money into. It won't be any of those types of conversations. That is not what we do. What we are solely focused on is helping you find fulfillment in your retirement and making the finances fit those goals.
Right.
And that's what this is all about. That's why you saved the money. Ultimately, you saved it to spend it, but you saved it to use it as a tool to let you enjoy your retirement. So what does that mean for you? What does enjoying retirement mean for you? And I think that's the question that everybody needs to ask themselves. What do I really want to do?
Well, and you've said this before on the show, it's you're reverse engineering the process. You're talking about what you want out of retirement, those goals, and then you build that plan to get you there so you can go and enjoy it. I mean, that's what you've saved your money for. Having a plan, having structure, having purpose when it comes to your retirement, the opportunity to get your questions answered, to talk about your retirement goals. It is ongoing during the course of this show. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Grab one of our complimentary no-obligation appointments by calling 866-668-3625. That's 866-668-3625. You can also visit the website, efmnw.com, all letters, efmnw.com. These are questions from around the country. Next up, Steve-O, here we go. They want to travel more in the early years of retirement, but they're worried about spending too much money too soon. How do you balance enjoying those active years without creating problems later?
Yeah, I mean, it's a common theme of today's show, I think, spending in retirement and how to do it successfully. So yeah, and I think when we look at a plan, we really don't know until we get all of the information. We don't know how that spending will look in retirement. So it's a bit of a mystery to us all. So we're looking at all of your assets, checking and savings, 401ks, Roth money, also factoring in Social Security's income, and perhaps the person has a pension too. And then finally, we get to the magic number. How much money are you looking to spend in retirement? And also we have to think about inflation too. So, I mean, we're not just factoring in like today's money. We've got to think forward and say, hey, is this sustainable income in retirement? So finally we get to the question, can I go traveling in my first 10 years of retirement? And the answer is we don't really know. We'll look at the assets. We'll say, hey, perhaps maybe you'll leave a lot of money as an inheritance at the cost of enjoying your own retirement, or actually, here's the green light. You can actually spend a lot more money in retirement than you thought, and you can go ahead and travel. And that's a great feeling when that happens, for sure.
All I know and what we know here is if you've got income that fills the bucket up every month, you could and you're staying within that budget, even if you spend every dime that month, the bucket fills up the next month. That's retirement freedom, right? So everything truly does boil down to income. That's the bottom line. You can have a big 401k, but again, take this statement over to McDonald's and ask them for a burger, right? They're not going to give you one, right? You got to turn it into cash. You've got to turn it into income. So again, once your income is set and you have a really wonderful source of income, it's going to allow you to do the things that Steve was just talking about. You're going to be able to take those trips. You know that you're not going to run out of money. That's the bottom line, because that's the number one fear of every retiree pretty much is they don't want to run out of money. How can we help them to feel confident about the spending patterns that they want to have and keep them above water and where they don't start drowning.
Most people don't. They don't live their working life with a budget. Yeah. We see that a lot, right? Most people don't. And at some point they've probably created a budget, that kind of thing. But when you get into retirement, that budget's really important, right? And it isn't because that doesn't mean that you can't spend more than that or something, right? It's not meant to be a limiting piece, but really it's meant to be a baseline, right? So here's my monthly expenses. Okay, cool. Well, I want to do some traveling, like you said, right, Steve? I want to go do this. I want to go do that. And if that's the case, we need to build that in, right? So when we start talking about income, and you can say, "Oh, I could live pretty good on $6,000 a month after taxes. That covers all my expenses. I got a little spending money. That's great." If you want to go do some travel, well, you probably need $7,000 or $8,000 a month, right? Depending on the travel you want to do. You might need more than that. I don't know. It all depends on you. But that's the key, right? That's what makes it special. It is about you, right? It is about what you want to do in your retirement. And so that budgetary piece is something that's so valuable to take the time and to see not only what the necessary expenses are, just what it costs to wake up and be me, right? Utilities and insurance and gas and things like that, but then also the discretionary spending. What I want an extra $2,500 a month to spend on whatever I want to spend it on. That's great. It just needs to be built into the budget up front so that you can have the confidence that that's what it's going to look like, not only now, but for years to come. And oftentimes we see as folks age, right, they probably spend less in retirement. And so we can have an income plan that actually declines in later years, assuming that all those other parts and pieces are taken care of first. So that's what a plan is, right? We talk about a financial plan all the time. That's really what it is. It's the ability to spend and to do it with confidence and to address each of those potential problems.
Yeah, I mean, planning is structure, and it gives you permission to spend your money. And if you're just out there sitting on a portfolio, you have no idea, right? You've got a nice nest egg, but now you need to start the planning part of it. All right, final question. We'll hit it real quick. Casey, to you. They're considering giving a large financial gift to their children now instead of waiting. How do you approach giving while living without putting your own plan at risk?
There's a couple ways that it can be accomplished, right? If you'd like to give a financial gift to the kids now, there are some numbers each year. Is it $18,000 this year? I don't remember the exact number, but that you can gift without hitting a tax issue. There's other things that you can do. So maybe the gift that you give is to take them on something that isn't just for them, but it's a little bit for you too. So maybe you take them on a trip, right? We've talked about that a couple times today. And that's a gift for them. That's something that saves, puts a little money back in their pocket. But it's also memories that you get to have together. And that's something that we see folks miss a lot, is they don't create the memories with their children and with their grandkids in the golden years. When those memories should be created, right? So that's part of it. The other thing that you can do too is if you'd like to gift to the kids, life insurance is one of the best ways to do it for down the road, right? So that's something that can be planned for too. So there's lots of options, and it all comes down to a retirement plan and what you'd like to do.
This is something that Casey just mentioned. If you've got a plan, you're going to feel like you can do it, right? How many times do we say, I'd like to pass money to my children with warm hands, right? And not cold hands. So again, if you're listening, please pick up the phone. We're going to have a conversation. That's all we're going to do. Let's talk about your specific situation. Let us help, because we can talk about taxes or whatever is on your mind when it comes to taxes or retirement planning. Pick up the phone, give us a call.
All right, here's the phone number, 866-668-3625. That number again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. But these are complimentary, no obligation appointments. Call now, 866-668-3625. Another edition of Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle, in the books. For Mark Stimpson, Casey Elkins, and Steve O'Flynn, I'm Morgan Patrick. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.